Hi guys, welcome back to my diary, and if you're new here, in this space I talk about forex related stuff, the mistakes that I've made, and most important, the lesson that I've learned along the way. So if you find this video very interesting, kindly hit that subscribe button, like the video, and let's grow together. Now in today's video, it is a very interesting video because I want to teach you about 5 best forex patterns that you can learn today, and they'll help you along the way. Now if there's one thing that I want you to learn, at least from me, because I've made this mistake a lot of time, you don't have to master like 20 patterns. Like there are so many patterns, but you don't have to master all of them. At least stick to maybe 3, 2, or even like 5, but at least they are similar. So anytime you can spot that pattern, you know what to do. Now by the end of the video, you'll understand that there are 3 patterns, only that for now you don't know there are 5, but at the end of the video you'll understand that there are 3. But for now, let me teach you, but I believe you'll see why I'm saying there are 3. And the first pattern is called, I've drawn for you so that the video will not be too long. Now the first pattern is called a double bottom. Now a double bottom, this is a pattern that supports buy, and key thing to understand in a double bottom, it can either be on an uptrend or on a downtrend. And on a downtrend market, ensure that you're careful. You just don't have to be so much excited that it will go to your direction, because it is very hard to trade a double bottom on a downtrend. Now you'll understand why I'm saying that one. On the third pattern, how do a double bottom looks like. This is an example of a double bottom, and this is the first leg, but in the chart it will not look like this. This is just but a diagram. This is the first leg, and this is the second leg. This is the neckline, and the half should be around here. And if the market was trending downward, it came to this point, then it went upward, it went down again, and it failed to break this zone, then you call it a double bottom. Okay, and when you call it a double bottom, we anticipate that if the market does not break this zone, then it will go up. But there are ways that you can use to enter the market. Now I have an ongoing trade. Let me show you. I have an ongoing trade about a double bottom that I took, but it is still ongoing. Now this is a live market. I spotted this pattern yesterday on Euro USD on 4 hour. It has a double bottom, and this double bottom is only on 4 hour. Now I'll teach you how you can spot that type of pattern, but for now, at least understand this is what I'm saying. On the chart, it is not like exactly on the diagram, so you have to understand the chart is different from the diagram, because you'll never have a perfect pattern. So it is you, at least as long as you're familiar how it looks like, now you'll know how to get into the market using that pattern. Now this is an example of a double bottom. You see, this market is moving on an uptrend market, and there was a buyers and sellers were here. Like there was something here, I don't know how to explain, but when the market came here, I started noticing here. I was telling myself I can spot a double bottom here, but at least let me just wait, because this is on an uptrend market, so I cannot sell the market. For me, this is just but a retracement. That is what I was telling myself, because on daily this is just but a retracement. Okay, so when the market came here on the daily, this is just but a retracement. So when the market came here, it forms another leg, but it failed to break here. When you go to daily, there's nothing, but on the 4 hour you'll find it is a pattern. So after I spotted this candle, this spinning top, and I'll teach you about these candles in the next video. I don't know which video, but at one point I'll teach you about these patterns, this kind of candles. So when it came here, I entered the market at this place, but there are factors still you have to consider when you enter the market. I waited for retest, and when it came here, I entered a second trade here. You see this candle, It is so big. This candle is so big. So I entered the first trade here and I was ready. If it violates my pattern, then I will lose this amount of money, and if it goes my direction, then I will gain this amount of money. So it is still on. You see, this is still a live market. So I entered the first trade here, and after it retested, I entered the second trade here, and it is still moving. But the point is, I wanted you to understand how double bottom is formed when the second leg failed to break on the first leg. So that is how a double bottom is formed. And when you enter the double bottom, at least understand if it is if the neckline is very far. This is the first leg, the second leg, and this is the neckline. If it is very far, you can measure the half, but if it is not that far, because it is just only for 4 hours, you can use the order block. You can use the order block, or at least look where the market can either go. And today, because we have a lot of news, I don't know if it will reach here, but at least a break even. So even if it goes bad, at least I'll not lose my money. So use an order block, so at least you can know where to take your TP. Okay, so that is an example of a double bottom. Now for a double top, the second pattern is called a double top, and it is the opposite of a double bottom. You see, I've drawn for you for easy understanding. A double top. Now this one is support sell, and it can either be on an uptrend or a downtrend, and you have to understand a double top on an uptrend can be very hard to trade because the buyers are in full control, and there is no way you can just bring this market down. So sometimes it is very hard to trade, and you will understand that in the next pattern. Now the second pattern is called the double top. It is the opposite of the double bottom. You see, first top, second top, first top, second top. This is around this area. This is where we have the half, like I've shown you in the double bottom. So this is the half, and here we have the neckline. So if it breaks, then it will complete the double top. If it fails to break, then I'll show you the next pattern. Now the next pattern that you have to understand, you see, they're so easy. As long as you understand the first one, then you'll know how the second works. The third pattern is called cup and handle. Now I love cup and handle because this is where it is a failed double top, and it is valid when the second top is broken, or it fails to break the half or reach the neckline. What do I mean? This is what I mean. This is what I mean. The market was moving upward. It came to this point, then it moved downward. It came and it made another top. Now when it was moving down, it failed to go to the half, and instead it reversed now and it is going up. Let me try and draw it so that for easy understanding. Let me try and draw it. This is what I mean. You see, this is the cup. Shooting with the phone is quite hard. This is the cup, and this should be the handle. This should be the handle. Now, what I mean by here, you see, on this first top, on the second top, this is the neckline. But now, because we are anticipating that this market will go to the half, to the neckline, then it will complete the double top. But instead, it either reached the half and it failed to break the half, or maybe it went to the neckline and still it never broke the neckline. Instead, it reversed and it went up. It broke the first leg, it broke the second leg, and now it is going up. Now you'll wait for retest and you'll enter the market. I hope you understand, but I will look for a detailed video to explain to you, but at least that is how a cup and handle looks like. The other pattern, the fourth pattern, is called the inverted cup and handle. Now it is the opposite of cup and handle. You see, it is the opposite of the cup and handle, and this one it supports sell, and it is only valid when the second bottom of the leg it fails after maybe reaching to the half, or does not even reach to the neckline or that half. It is the complete opposite of the cup and handle. That is why I'm saying there are three patterns. You see, as long as you understand the first pattern, the second one is the opposite of the first pattern, and the last pattern is called the ranging channel. This one is easy. I know most of the people know about this one. It is the ranging or the consolidating pattern, and this type of pattern, it moves sideways. Like, it is very hard to trade, especially this kind of market. This kind of pattern is very hard to trade, especially when the box has not yet been broken. What do I mean? This is what I mean. This is the box, and the market is inside here. It is neither breaking down nor breaking up. It keeps consolidating, and you cannot trade inside here because when you enter here, the market moves downward or goes up. Now you lose a lot of money. Instead of that, just wait for this market to break the box, retest, or use the factor that you use for you to enter the market, so at least you can trade. But if you trade inside here, you lose a lot of money. So I hope you have understood those patterns, and I'll try to go into detail about how these patterns work. So I hope you have understood, but at the end of the day, there are only three patterns that I use. I started with 5, but you see, double top and double bottom. Double bottom is the opposite of double top, and cup and handle is the opposite of inverted cup and handle. So we have double top, cup and handle, and the ranging channel because it is the opposite. So I hope you understand, and I'll try to teach you more because I have a lot of videos. There are so many, and I want you to learn. I want us to create this journey. Like, I don't want you to have so many mentors, because hey, it has messed me a lot, and I hope my trade will go to my direction. If it goes well, I'll still come back and tell you. If I find that it is by the end of this candle closes and I find that it is misbehaving, I'll just close my trade. So I'm watching it, and I hope it will go well. And one thing again you have to understand, if you have a double bottom and the neckline is so far, just measure the half. After you've measured the half, you can just place your TP here. If I placed my TP here, it could have already been hit, but my TP is here because I saw there was nothing to make this market go down. There was nothing here to make this market go down. That is why I placed my TP around here. It has not been hit, but I'm hoping it will go down. But at the end of the day, the market is random. You just watch what the market is saying. You don't predict. You just analyze and let the market play. So if it is an uptrend, we support buy. If it's a downtrend, you just go with the market, because at the end of the day, we are small traders and we can never move the market. Okay, we can never move the market. So thank you for watching this video. I hope that you like it and you'll subscribe. Thank you.